Boom. Now it's official. Welcome to the Scale Call, y'all. Today is Thursday, March 9th. And we're going to be talking about, does it balance today? And next week, we're going to be looking at how to figure out where your money went. And I've got a new worksheet for that as well. But here's the problem. Here's the scenario. So imagine that you're sitting down and you look at your books. And so you're looking at your profit and loss statement. And then you go to move money around and, you're using the dashboard and it tells you you should be able to afford this much for taxes, this much to pay yourself, this much for growth funds. But you go in and you look at your bank account and you see, I don't have the money there to do all that. What's up? And it's a really frustrating thing to have happen. And there's a couple reasons why it does. And today I want to talk about how we catch that and how we catch bookkeeping errors at its core, but also how to actually deal with when things don't look right in the bank account, which happens more frequently than I would like for people. And we've dealt with it a number of times the past couple of weeks, and we've had to dig in and figure out where the heck did this stuff go? What's going on? And so let's throw a little bit of drawing up here. Actually, no, let's do the spreadsheet first here. I think this will make more sense visually from here. Let's pull up it, and it's so ugly, you guys. You know that when I finally give it to you all, it will look a lot better. But for right now, we're going full on ugly mode, which is exactly how we build these spreadsheets. They're really ugly at first, and then they're slightly less ugly, and then they're presentable. So I wanted to talk through these, and I know this looks so spreadsheety, and there's no colors on it. There's crappy organization, but I wanted to talk through this, and it may be completely wrong. We'll see. I just did all the math this morning for it. And it uses some pretty fancy formulas, y'all. Check out the nerdiness there. All right. So let's talk through this. And ultimately this happens for a couple different reasons. One is you might be moving money in or out of your bank account throughout the month that isn't showing up on your profit and loss statement. So for example, anytime you pay yourself or, and it's not through W-2 salary, or anytime you transfer money from one account to another, or anytime you're paying off debt that's like principal pay down, meaning it's the initial amount that you took out as a loan or from a credit card, that money moves around, but it might not show up on your profit and loss statement. In fact, it probably won't if it's one of those three cases. So the problem is when we go to look at your dashboard, and let's say let's pull up a template here. Well, actually, we've got one of the ugly templates here, I believe. Right now, reviews, cash flow. We'll have to pull it up from our template here. So right here, we'll go pull this guy up. Let's go get the monthly review. Here we go. So we're going in here, and I know this looks just a little bit different than you guys are used to on yours. I'm finishing a redesign of this. It's not done at all. But we put in revenue, we put in cost of goods, we put in expenses, and it spits out all these numbers. And you might see something like available owner compensation here. Now, these are some wild numbers here because we're going with some crazy things. Let's just put something like 80 grand, 20 grand, and I don't know, 30 grand. Cool. It's like, all right, I should have 17,000 available for me for owner comp. I should be able to move 9K of taxes and 4K of growth funds. And then you go in here to the buckets calculator and you're like, there's not enough money here, and this leftover to allocate is totally negative. What happened? Well, here's the thing. A lot of this stuff that we just talked through when looking at the principal debt pay down, the owner's compensation, or other stuff, it doesn't show up on your profit and loss, right? And why is that? Well, owner's compensation, if you're not doing a W-2 salary, right? If you're just paying out an owner's distribution, that's not a real business expense. It's not a business write-off. And so even though money is moving out of the business, that's not going to show up on your profit and loss statement at all. Second one is we talked about principal debt pay down. So when you swipe your credit card and let's say you buy a brand new iPad, and you go into Best Buy, you swipe it on your credit card, it's your business card, it's going to show up on your business credit card that day, and it's going to show up on your profit and loss statement that month. So let's say it's, March 8th, and you swipe your credit card, it'll show up in March as an expense on your profit and loss statement. But it hasn't come out of your bank account yet because your credit card statement hasn't been due, right? Usually your credit card statement's not due for like a month after you make the swipe. And so you might actually pay off that amount of the iPad. It might leave your bank account in April. But again, that's not reflected on your profit and loss statement, right? It's only showed up when you swipe your card, especially if you're doing cash basis accounting. And so these numbers can start to get off a little bit. And it gets really frustrating when it's large sums of money. But the other problem that can happen is you might see these numbers and say, I should have 17,000 left over. But when I add all this stuff up, I don't have 17,000 and 9 and 4. In other words, I don't have an extra $30,000 in my bank account versus the start of the month. I've only got 10. It's like, wow, I have a really significant difference. Or maybe it's only $5,000, whatever it is. It might be a sign that there's an error in your books. And we caught this last week with a client as we were going through, we were doing our payouts, and they've got a very simple business model. And so it's really easy to see where the numbers are off, and they don't have a lot of debt payback. And they hadn't made any owner's distributions transfers because we only make them once a month now. And when I was sitting down with this owner, I said, there's like a $3,000, $4,000 difference here in the bank account versus what we would expect. What's going on? And so we dug in and we went through every single transaction in their bank account and looked at every single line item on their profit and loss statement. We found the error. They were their bookkeeper had missed a payroll tax payment of like $4,000. It was 2 of them, actually. It was like, that's a pretty significant expense to miss. And when we went back and looked at last year's stuff, it was pretty likely that they missed all of those for last year as well. And so this could be a multi-$1,000 problem for you if you don't catch it, where, for example, let's say she had $20,000 of payroll expenses that didn't get captured on her profit and loss statement. That means she'd be reporting to the IRS that she had 20,000 more profit than she really had. And you're going to pay all the tax on that 20,000 of profit. So that might be something like, 25%. And so if we're paying 25% of 20,000, gosh, that's like an extra $5,000 that it could cost you, right? And so a lot of times I find that bookkeepers will do their very best, and we love our bookkeepers, and at some point we'll have one in here over the next little bit. But sometimes they just don't know. And so I'm sure that as they were looking at those expenses on her profit and loss statement, they were saying, oh, that's probably a tax payment, right? She's paying personal taxes through the business because it was just coded. It looked a little bit different than some of her other payroll things. And so this could be a really expensive error to not find, but it can be a really frustrating one too. If you're like, okay, why is the money not there? So I just want to talk through a couple of these things here and look at how we would look at this in a month. And this is a spreadsheet that eventually I'll make it pretty and we'll fit it into the curriculum, and we'll do this on a monthly basis if you notice an error. Okay. So first, how do I know when I should look at this? Well, if I'm going through and I look at my net profit for a month, especially if I'm looking at cash basis accounting, and I see that there's $30,000 of profit, and then I look at my business in my or the balance in my business checking account, and I can compare it to the balance at the beginning of the month. And the nice thing is, with the way that we run all of this, we'll tell you how much was in there at the beginning of the month. It's whatever we were returning your reserves to, right? So let's say we return our reserves to $30,000, and in my bank account, I've only got $50,000 at the end of the month. This is part of why this system is so useful, because you can see, I started with $30,000 and I ended with 50. That's only 20,000 of increase, but I should have 30,000. Where did that money go? All right. So this is where we might go into this thought process. So one way to do it, and this is how I would do it with you if I were sitting down, but I want to walk you through the process so you can do it on your own, is I would look in my different bank accounts and I would say, okay, if I know I wasn't moving money around to a bunch of different accounts, then I might only need to worry about my main checking account, right? Maybe it's my operating expenses account or my, the one checking account. So I'd put in my balance at the beginning, and let's say that it was $30,000, right? Because that's where I sort of return my reserves to in my monthly process. And then let's say it ended at $50,000. And then I can put in my net income here, or my profit, right? So we had profit of 30,000. And then let's say I was at 30, I ended at 50. I should have had 30,000 of net profit. And let's see if this does it right. Actual ending balance was 50. The difference is not correct. This is where the spreadsheet hasn't even been tested yet. But this should say something like, hey, our starting balance was 30. the money in, and then it's just simple math, right? So if we started with 30, we added in an extra 30, then our expected balance, oh, I got to put a 0 here, that's why. Then our expected balance should be 60,000. And if we make these like this, so it's easier to read, right? Because 30 plus 30 should equal 60. Well, I only have 50,000. And so in reality, this should say something like 10,000 less. Got to work on the math here. This should say 10,000 less than expected in my account. So it can tell me, hey, there's $10,000 that I got to go figure out where it went. So then I might dig a little bit deeper and say, okay, how much principal debt pay down do I have? So if I have a bunch of different loans, then I know that some of that money that I'm paying back on those loans goes towards interest and the other amount goes towards principal. And if you and I haven't covered this individually yet, we need to, and we will be, but we need to know how much of my principal debt pay down is happening each month. So let's say I had 5,000 of principal debt pay down, and then I had an owner's comp pay of 5,000 for an owner's distribution. Okay, cool. Now I'm break even, right? Clearly the math isn't right here, but it would say, hey, I started with 30, I added an extra 30, and then I subtracted 10. So 30 plus 30 is 60 minus 10, there's my 50, right? And then this difference here should say 0 because the math isn't right. And it's like, okay, now I know where the money went. The problem is when I do this and I see, hey, you know, this extra money that went out that wasn't on my profit and loss statement, this money that went out, it still doesn't add up. Well, then I'm thinking one of a couple things. Either one, I didn't find that money. Like there's some money that I just didn't see that went out. Maybe I made a transfer somewhere or a credit card payment or something. Or the more likely scenario in this case, if I've gone through this, my books are just wrong. My profit and loss statement is wrong. And, you know, I have pretty intense trust in my bookkeeper, but they do make mistakes. And so this process is important to go through. And this is the much more complex, like, oh, if I'm looking at all these things, where's it going? The simple math is I look at my net profit, I look at where my reserves were, and I see how far off am I? And, you know, would I expect to have an extra 30K in there? And I only had 20, where'd it go? And sometimes we can just talk through it and like, oh yeah, I made enough debt payments that, yeah, that makes sense. But if that simple math doesn't stack up, then we go to this level and like, hey, how much am I off? And this can actually really matter on a yearly basis. And I have a number of clients that we're still working through this with their bookkeepers, where we looked at how much they started with at the beginning of the year, how much they ended with, how much money they moved out. And they didn't realize like, oh, I bought a giant car and my car wasn't on the balance sheet at all. And so all my numbers look way off. And so this is really a way to check, is my accountant, is my bookkeeper doing the right things in my books, or is there something that they're missing? And it can be really expensive to miss. We found $20,000 of missed expenses on one client's balance, not expenses, of investments that a business owner had made last week. They found $20,000 that their bookkeeper didn't know had happened. And so it's thrown off all the numbers. It's like, well, glad that we checked, right? Because it has huge tax implications for everyone involved. And so this is something where we all kind of just expect that the bookkeeper has their crap together and that they'll catch that stuff. It's like, you know, oftentimes they're working with 20 or more clients and you're just another drop in the bucket. And there is some, I guess, weight on your shoulders to make sure that things end up right. And that as you're checking through numbers, it's just good to see, hey, do I expect a certain amount in there? If so, how much? And how off are we from reality? And if we're really far off, then we go do some digging to make sure that we get things right. And it could save you a whole heck of a lot of money for, you know, an hour's worth of work to go save 5,000 on taxes. I'll do that every stinking day. So a little bit of a complex, like weird topic today, but it's something that keeps popping up with people. So wanted to talk through that briefly and then open it up for some conversation around that or any other topic that y'all have.